Good evening, everyone. Just doing a quick sound test. If you can confirm in the chat window that you can hear me, that'll be much appreciated. We'll be getting started very shortly. Thank you. Good evening, everyone. Just doing a quick sound test. Can everyone in the chat room just confirm that you can hear me? I haven't got any confirmations yet, but if you can, just write a quick yes, I can hear you. That'll be much appreciated. Thank you. Good evening, everyone, and welcome to tonight's webinar. Just doing another quick sound test. Thank you for everyone who's confirmed so far. We'll be starting in approximately 5 minutes. Thank you, and yeah, we'll get started shortly. Good evening, everyone, and welcome to tonight's webinar. Tonight I'll be running a cryptocurrency live trading webinar. Okay, just a quick disclaimer that this presentation is educational in nature and that no personal financial advice will be provided. If you wish to seek personal financial advice, please seek a qualified financial planner or financial advisor. Please take a moment to read through the rest of the disclaimer. Okay, so my name is Jimmy Pan. I'm the head of sales here for easyMarkets, Asia Pac region. Just a bit about myself. So I've been, working in this industry for about 10 years now across various CFD and FX brokers. I've been a personal trader for about 12 years now, mainly across FX indices for the majority of that time, and obviously, commodities in there, but probably the last year or so, I've been focusing more on cryptocurrencies, in particular Bitcoin, which I'll be discussing today in greater detail. So my key experience is generally with technical analysis across various disciplines of charting, and one of the things that I've sort of learnt over time is, you can read all the books in the world, learn all the different trading strategies and whatnot, but in time, you'll sort of find, which tools you like, which ones sort of paint the picture of the market that you can interpret and you can act on, and they're the ones that sort of, that you'll stick with. So you don't need, millions of indicators. You just need the ones that make sense to you. So I guess the ones that I like looking at is, price action, Fibonacci analysis, and I like looking at the RSI. The RSI just sort of gives me a bit of an indication of, when the market's overheated or when, when there's lots of fear in the market. So sort of, just giving me those levels. And I've sort of mentioned there, so key markets. I used to trade heavily during the European session on the European indices like the DAX, the FTSE, and also the US indices as well, and more recently cryptocurrencies. Okay, so I just wanted to start off the presentation to sort of give us a bit of an idea of where we are in, in this space. So in terms of in this cycle, so with the blockchain technology timeline, this gives us a bit of an idea of type of growth that we are expecting to see ahead. So right now, 2015, exploration and investment. This is kind of when, a lot of big investment banks, financial services companies, and other companies that were interested in blockchain technology to sort of help their, current business needs and try to in that scalability and whatnot. So that was kind of when we saw initial inquiries into that. Early adoption, we're starting to see, more and more banks really take this, a lot more seriously. So we saw last year a lot of big banks over in Europe, Japan, South Korea, even in the US, experimenting with cross-border payments provider Ripple, looking at their technology and how they can, essentially reduce their fees. Because I think one of the things that a lot of people used to joke about is, if you wanted to send, let's say, 10,000 US dollars to London, it would almost be quicker to sort of grab that cash, that $10,000 cash, jump on a private jet, fly over to London, and deliver and personally deliver that, that parcel of cash. It'll be quicker than transferring it over, via the banking system. So the reason for that is the banking system is made up of a lot of centralized systems, and it's these systems have to trust each other to move the cash from one point to another. The blockchain technology sort of solves that issue where you don't have that third party, and you and myself can transact, send things across with complete trust, transparency, and security of that data. And that's why we're starting to see, and remember, blockchain is the underlying technology that gives a lot of these cryptocurrencies its value. What we're seeing now is the growth phase. So, start of 2018, obviously it's been very rocky for Bitcoin and a lot of cryptocurrencies. We saw a huge, ramp up in the market cap. We started 2017 at 17 billion. We got to a peak in 2017 of around 880 billion, maybe a little bit less. And then right now, we saw when everything crashed, we got as low as 225 billion. So almost a 75%, correction, which is huge, right? So, but we're starting to see a bit of a recovery now. And this growth period that we're seeing is, sort of projected from now up until 2024. So when you look at the timeline on a lot of these big blockchain projects, they're going to start to come out with their working prototypes and actually be integrating a lot of systems throughout the next few years. So sort of keep an eye on that space. It's one of the things that once we see it up and running, that's when we're probably going to get a lot more investment into it. And of course, right now, we're getting a lot more regulation into the marketplace, which is obviously scary short term because the news is going to spin it as a negative thing, but long term, that's what's going to allow for the the larger institutional flow of money into this particular market. Okay, so this is just a quick snapshot of, we can see 2015, 2016, this is all the big banks, financial institutions, payment systems, exchanges, etc., all looking to blockchain. And as you know, there's the ASX logo. The ASX is going to be getting rid of the chess system, and they're going to be implementing a blockchain, system very shortly for all our share transactions. So that's going to almost mean, and I've been told potentially could mean instant settlement of your shares. So that's almost unheard of. It used to be T+3, now it's T+2, so a little bit quicker, but you're getting instant transfers. Imagine what it can do for everyone who wants to trade shares more actively. Like, it's going to open up, way more volume, I believe. So if you could sell shares, get the proceeds of those shares straight away, and you see an opportunity to jump onto another stock, let's say, that's going to allow you to do that. Whereas in the past, some traders might not do that. So anyways, that's just a quick snapshot there. I just wanted to show this slide. This was, one that I had in my previous presentation, but I just wanted to let you sort of visualize the type of growth that we're seeing in this space. So, and this is still growing, not as fast as it was last year, but it's still growing, and we're getting more and more users, opening up crypto accounts and things like that. And here at easyMarkets, we're still getting steady interest in the clients. It hasn't been to the level that we saw back in October, November, December, but the interest is there. And I believe once we sort of start to see an upswing in prices, and we really start to see much higher levels of price levels this year, then the interest is definitely going to come back. So now it's a good time to sort of educate yourself and learn some strategies, which I'll be covering a little bit later as well. So this is the blockchain ecosystem. So you can see Bitcoin here. These are the currencies, but there's so many different other type of coins looking to solve other problems, that can be anything from, like, for example, there's this one coin or one project that I like called Venchain. They're actually developing, their blockchain is going to be potentially implemented in all BMW cars, where BMW cars will have their history recorded on the blockchain, meaning you'll know exactly the exact spermometer reading. You'll know exactly every service history that it's done. You'll know if it's been in an accident. How many owners there are and all that sort of stuff, right? So that's going to give you a high degree of confidence when you're, when you're purchasing a BMW. You can see the entire history, and it cannot be changed. Like, you can't change that stuff. That's, once it's on the blockchain, that's it. It's immutable. So so that's huge. So now gone are the days where the mechanic who's trying to sell a second-hand car, they dial back the spermometer reading and all that sort of stuff. That won't happen anymore. Okay, so what is a blockchain? So basically, the blockchain, like I mentioned, is the underlying infrastructure to facilitate, the transfer of Bitcoin from one person to another, etc. And it does it in a secure manner, so that no single entity can affect that data. It also uses a distributed ledger, meaning that there's lots of different servers all around that need to agree that, yep, this is this block, this transaction has occurred. Yes, we all agree, and then they'll update their individual ledgers, which is all the same at the same time. So imagine if you're a hacker, like if I was a hacker and I wanted to hack, we've seen a lot of them, right? We've seen a lot of organizations being hacked. But let's say I wanted to hack Twitter. It's very easy to change information there, because it's all stored in one central location. So what I mean by that is, if you store all your information in one place and you can gain access to that somehow, you can change the information, steal the information, do whatever you want with that. Now, on the blockchain, however, because that same information is stored in lots of different places, many, 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 many different places, and if you want to change one, you couldn't do it, because when it goes to reach the consensus, they'll realize that that particular ledger has been tampered with, and it gets rejected, and they still keep running with the current one. So you can never really you can never really tamper with any of the information that you do that. It's incredibly hard. So I sort of come across this analogy, which I thought was quite funny. So it's almost as hard as if someone told you, we know chicken nuggets are made up of, chicken or very small parts of chicken. But if someone could work out how to turn a chicken nugget into a chicken again, that's how hard it's going to be to, to block that. So anyways, hopefully you found that funny. But yeah, so that's essentially, the blockchain technology that sort of underlines that. So think of it as that infrastructure that underlines that facilitates the movement of data, smart contracts, etc., from one place to another in a secured, unmutable way, which everyone trusts. Okay, so how the blockchain works is quickly. If person A wants to send money to person B, the transaction is represented as a block. The block is broadcasted to the network. So these are all the miners all around the world. Those in the network then approve the transaction. So they go, yep, we've all got it. We've upped that on our end. Then they add it to the blockchain. So that, or the digital ledger, digital distributed ledger, and then the money moves from A to B. So that's in a very simplified way on how it works. But the thing is, you could never go in and change any of that information, right? So that's where the power lies. So imagine, if you had a high degree of, high degree of confidence that whatever you send, whatever information you you save, etc., is always going to be there. It cannot be tampered with. It's always going to be secure. Then that's going to give you a high degree of trust, and especially when it involves a monetary value like Bitcoin, that's essentially what you need. So, Bitcoin and the algorithm behind it, which is i.e. the blockchain, solves that double spend problem as well that a lot of people have been trying to solve over time, because like digital currencies has been around for a long time. The concept of it has been around for a long time, but it wasn't until that white paper that Satoshi Nakamoto released back in late 2008, in the midst of the financial crisis, financial services, GFC, global financial services crisis, that it really started to take shape and form. Okay, so when we look at the adoption rate of technology, this is currently where Bitcoin is, right at the start, and you can see, all these other big, game-changing, technologies over time that has, really grown and grown and grown. So, sometimes, when I speak to people and they ask me, when, is now the right time to get into, Bitcoin and all that sort of stuff? It's almost, sometimes you can say it's almost like, thinking about someone telling you about Google on the ground floor, when before Google was taking off. Obviously, at the time Google was competing with other search engines and all that sort of stuff. But if someone said to you, no, I think Google's going to be the one that sticks around and actually, take off from here, I think that's kind of the same with Bitcoin. Like, there's still a lot of room to grow, like in terms of in this cryptocurrency space. When we compare the dot-com bubble versus the crypto bubble, this is kind of where we are in terms of market cap. So we can see we're sort of traveling around here at the moment. So, whether we get up to the 10 trillion mark, so if the whole cryptocurrency market got up to 10 trillion, remember Bitcoin hit 20,000 when we were at 880 billion market cap. So sort of times that by 10, it was at 20,000. That kind of puts it at Bitcoin at around that 200,000 mark. And of course, that's just very, very big generalizations. It could be worth a lot more, it could be worth a lot less, but we'll see. But this is kind of just a visual representation of where we are if we sort of compare the two. And just a quick introduction to Bitcoin. So Bitcoin, it's a type of digital currency which is held and transacted electronically via a distributed ledger. So in other words, it's just a digital currency that's transferred securely. It's a bit of a mouthful there. There's a coin cap of 21 million coins, so we're currently at 16.8 million. It's been verified that about 4 million Bitcoins have been lost, that is never able to be retrieved. So these are like the guys who were mining Bitcoin earlier on, and then they sort of lost their laptops or their hard drives and all that sort of stuff, and just general, nowadays when people sort of lose it. So that all adds up to about 4 million. The last Bitcoin will be mined in the year 2140. So still a long way to go. The most popular cryptocurrency by far, and it's currently got a market cap of about 135. I think it might be a little bit more now. So this was sort of done a few weeks back. So what is Bitcoin mining? Bitcoin mining essentially is, think of these guys as the computing power that keeps the network up, the blockchain up, because they're the ones that have to verify all the transactions. And every 10 minutes, Bitcoin basically rewards the person who verifies the block. So they have to use a lot of computing power to basically try and solve these these puzzles and whatnot. And once they do, they'll get rewarded by Bitcoin. That happens every 10 minutes. So every 10 minutes, a new block gets added to the blockchain. So essentially, Bitcoin mining. When I see a lot of people talk about Bitcoin's going to go to zero and all that sort of stuff, I highly doubt it. Main reason is when you sort of look at how much it actually costs to mine a Bitcoin. Like for example, if we were to mine a Bitcoin here in Australia, it would take it will cost approximately $9,400. That's US dollars. In the cheaper places, like this is all based on electricity costs, like the countries that have lower electricity costs, the lowest I saw was about 3,000, and 80. But that's only like one or two countries. Majority of countries where most of the big mining for farms are, they're generally paying anywhere from 4.5 to 6,000. So that's why it's not a coincidence that we saw the market drive right down to 5,900 and didn't stay there very long and then quickly shot back up, because that becomes a point where Bitcoin is unprofitable to mine. So these miners are going to go, hey, why should I mine, spend all this money on electricity? I'll just buy the Bitcoin if that's what we're looking to do to accumulate it. So a bit of food for thought there. Why is Bitcoin so valuable? So, again, it's the most popular cryptocurrency. It's the one that's been around the longest, and it's the one that has had so many books written about it. It's the one that's going to have the most financial sort of derivative and instruments sort of tied to it. Like, for example, easyMarkets, we're a broker. Our first cryptocurrency that we offered was Bitcoin. Likewise, the first cryptocurrency futures contract was Bitcoin on the CBOE, CME, and potentially Nasdaq later sometime this year. All the ETFs that are being built around cryptocurrencies will have a majority weighting of Bitcoin because it's the most volume. It has the most transacted cryptocurrency in the world. So, and there's a few more other points there. Cryptocurrencies and Bitcoin in particular is definitely one that has a lot of buzz around it. No one knew about it probably, in 2016, only for a small few. 2017, everyone's talking about it at dinner parties, at social gatherings, and all that sort of stuff, and we couldn't really escape it from the news, sort of through October, November, December, and of course, rising acceptance. So this is actually going to become a big theme for Bitcoin, because one of the biggest problems with Bitcoin was the transaction fees were so high during November and December. It was getting up to about $40 to $50 to transfer any amount of Bitcoin from one place. So from one wallet to another, it would cost you $50 US. That was quite ridiculous, right? So now it's costing, under 10 cents, I believe. So it's really dropped. There's been a few enhancements in, especially with Coinbase, adding some protocol updates called SegWit, and that has made it possible to batch a lot of these small orders together and send it through the network, and that's actually increased the speed, but also reduced the cost of that quite significantly. So we're getting closer and closer probably to the day where we will be able to use Bitcoin to pay for a coffee, whereas it was impossible back in December. We also have the Lightning Network, coming up as well. Lightning Network is just another additional add-on to Bitcoin's already existing blockchain to make transactions faster and to reduce the cost as well. So you can see, there's a lot of things happening with Bitcoin at the moment. Ethereum is another cryptocurrency that we offer here at easyMarkets, and it's an open source public blockchain based on distributed computing platform and operating system featuring smart contract scripting functionality. All right, so in layman terms, basically it's a blockchain platform for smart contracts. Smart contracts meaning me and you could write up a contract without an expensive middleman like a solicitor or lawyer, where we could say, okay, you know what, I believe New South Wales is going to beat Queensland in a state of origin. Whoever wins is going to win, this particular prize or whatever it is. And you can write that on the blockchain and it's done. You cannot change it. It's there, and obviously whatever the prize is, you build that in and it will be holding that value there. And whatever the result is, it will release that prize to whoever won that particular wager. So this was developed in 2013. Basically, Vitalik Buterin, he basically said, look, we want to build the world computer, and that's essentially what it is. Circulating supply, 97.4 million. So again, it's programmable contracts and money, and the market cap again is the second on the list there. So I'll show you a site that I like to use. Many of you might be familiar with it, but it's called CoinMarketCap. Ripple is also another very fascinating cryptocurrency because it's probably the one that has the most banking relationships or news around banks and all that sort of stuff, and it gets a lot of people excited. But I guess if I was to add my 2 cents, just if you are trading Ripple, be wary of what the news is going to affect. Meaning, if you get some positive news around Ripple, just think of it: is it going to affect the Ripple companies value, or is it going to affect the Ripple tokens value? Because what we've been seeing is a lot of these positive banking partnerships and all this sort of stuff. What we're seeing is a huge amount of clients sort of buying, Ripple on that news, but then also to all of a sudden realizing that, hey, you know what? It's actually not they're actually not going to use the Ripple tokens for these cross-border transactions. They're just interested in technology, and then you saw the price fall back down again. So, but anyways, we're only saying to really understand that now. But Ripple's been around since 2004, so a long time. A lot of people, have their qualms about Ripple, saying that they should have been listed on the Nasdaq as opposed to a cryptocurrency. But one of the things that I witnessed in November, December, it was quite insane. It was just basically watching Ripple go from 25 cents to a high of $3.20. So for something to increase more than tenfold in less than I would say 5 weeks was mind-boggling. And you can see Ripple still was the third most traded cryptocurrency there, so you can see how much money went into it. And I think a lot of the money went out of Bitcoin into Ripple to drive that, and then a lot of new money because everyone started to see it go up, and it was on all over CNBC and Bloomberg, etc. You just saw it really run up high. So yeah, that's the story of Ripple there. Okay, so ways to buy cryptocurrency. So many people who are looking to just buy and hold cryptocurrencies for weeks, months, years, etc. Will have to buy it from an exchange. The exchange will then generally they'll have their wallet. They'll create a wallet for you. So the wallet is where you would hold your digital currency, but that's actually the digital currency held on an exchange wallet. So there's all sorts of security issues with that, because if that exchange goes down or it gets hacked, those hackers potentially can steal all your coins essentially. So that's why they've created mobile, desktop, and cold storage, meaning that you're taking away from the exchange and you're holding it yourself. The only problem with that is that if you ever lose your private key or access to that wallet, then you pretty much lose your coins. So just be wary of that. That's one thing that tell all clients. If you just keep it on the exchange, just make sure you're using 2FA, meaning to Google Authenticator, so two-factor authentication. Looking at other ways in where you can store your coins. Now, with easyMarkets, we obviously offer Bitcoin as a derivative contract. I've actually got some good news. We currently have a 7-day expiry, but we're actually going to be
extending that to 14 days for all contracts now. Okay, so that's really good news, because that's probably been our biggest feedback. We had high spreads for a while because we had to, just in line with our liquidity providers, but we've dropped that down. So we've got one of the lowest spreads in the industry at the moment, and now we're looking to improve the actual expiry as well. So some really, really good changes there. And if you have some trades open right now, and you need those extended, just give us a call tomorrow and we'll be happy to extend that for another week. Now, the advantages of trading Bitcoin with a broker like us is that you don't have to worry about all the wallets and all that sort of stuff. You can see your balances at any time. And if you ever do, accidentally close your trades, or an order doesn't get filled properly or anything like that, you can always give us a call and we can investigate. And if we can identify the problem and it's nothing to do with you, but it was something to do on our end, we'll make good on that trade. Okay, so that's one thing that you can sort of trust with a broker to be able to do. But if you trade on an exchange and you don't get the right fills and all that sort of stuff, you can't really complain to anyone, because it's kind of not really regulated at the moment. Whereas we've been around for close to 20 years now, regulated by ASIC, etc. Okay, so just with the recent sell-off as well, I just want to revisit this chart. So this chart was done when we had the initial sell-off, so down to 5,900, and you can see how closely these patterns match. And you can see we're probably down around this area here now, I believe. So we sort of past the depression phase. I think that happened right around that low, and we're starting to sort of head back up again. But like I sort of mentioned to you before, the cost of mining at Bitcoin, if it's around the 4,500 to 6,000 mark, and we sort of hit a low around there, I think that would have been a very, very good bargain level to sort of get in at. And even if it goes a bit lower, then again, that it's not really plausible to sort of get any lower and stay there for any length of period of time, unless we do get some massive government crackdowns on crypto exchanges and all that sort of stuff, which is somewhat happening, but it's happening for good reasons. It's happening for reasons to stamp out a lot of the the cowboys in the industry, but also at the same time improving all the KYC and AML procedures. So again, that's going to drive out a lot of the unsavory, bad actors, in this space. Okay, so when I did my first presentation, which was 2 days after the crash, essentially, we were around this area down here. Okay, so now I think we're sort of moving up. We're probably around the hope area here. A lot of the the news that I see, we're starting to get, more and more bullish. Now, longer term, I'm not talking about like the next day, yes, this is good news and it's going to pop up to 20,000 again. Not that fast, but we are sort of, every market has a cycle. We've just gone through a bit of a bear cycle. What comes next is generally a bull cycle, right? So this is to sort of illustrate that fact, when we can see all the big pullbacks in Bitcoin in the past, and this is on a logarithmic chart. You can see, we pulled back about that 66, 67% mark, and we've already had, a nice bounce above that. So, this is telling us that we're, we could be able, we could be on the brink of another big, price acceleration. But again, all this has happened in the past. Bitcoin crashes very regularly. Every 8 to 12 months, you'll probably see a crash. Every quarter, you'll probably see a correction in the magnitude of 30 to 40%. So that's just a fact of life, when you're trading Bitcoin. So it's one of those things where if we're dipping and we've only dipped 10%, just be wary, because we could go another 20%, down to 30% level or more. So just be wary. I'm always being a dip buyer at the very deep levels. So when it seems like the world's going to end for cryptocurrencies, that's generally the time to sort of scale in. Because, chances are no one else is buying. You buy once everyone else sort of catches on, the market's going to lift and rebound very quickly. Okay, so Bitcoin price predictions. So, for this year, and just to sort of give it a bit of context, Bitcoin in July 2010, one Bitcoin was worth 6 cents. The all-time high was back in December, and it got as high as 19,896. So that is such a ridiculous return on investment. It's not funny, but yeah, you sort of get the idea there. If you just bought a few $100s worth of Bitcoin, it'd be worth, tens of millions of dollars now. Most 2018 forecasts come in between 25,000 to 50,000. And again, these are the optimistic forecasts. Obviously, when you look at the forecast from a lot of the financial professors and stuff like that, which I don't think have I don't think they've done the deep dive into cryptocurrencies and all that sort of stuff that a lot of other people that have given these other projections. They're sort of saying, Bitcoin between that 5,000 to zero mark. So so we'll see how we go. Longer term forecast. So Ronnie Myers, he's like a very prominent Bitcoin figure. Like, he was one of the early investors. He got a lot of people very rich by getting them into Bitcoin very early, and he's and to this day, like, I saw a tweet from him when Bitcoin was around the 8,000 mark. He goes, look, I bought big when the first Mt. Gox crash happened, and that was when Bitcoin in 2013 went as high as about 1,200. Then it came down, it basically corrected 90%, and it came down to about 130, 140. So he was saying he bought in around there, and he goes, look, this is Mt. Gox part 2. We saw another crash. I'm buying again. So the guy has sort of seen this stuff happen before. So he's calling for about 400,000 one day. Standpoint Research, they're pretty they're pretty active with their projections. So they said 50,000, but this was done back in 2017. So I'm sure this has sort of been revised now for especially that particular time frame. And just quickly, if we look at the daily growth rate of Bitcoin in 2017, you can see in 2015 it was 0.09%, 0.22 in 2016, 0.66 in 2017. If we sort of carry on that type of growth, Bitcoin, potentially will be worth about 250,000. So again, just take that with a grain of salt. That's just math and just playing with numbers. Now, this chart is something that I always keep. I first saw this probably late 2016, and this was sent to me by someone who was saying, look, watch out for 2017. We could see Bitcoin above, 5,000. And I laughed. I said, there is no chance Bitcoin's going to 5,000. I was trading it sort of when it was at 500-600 mark. Then I saw it double, and I was like, nah, it's a bubble. I'm not touching it. And of course, I didn't do any deep dive. I was trading other markets, but I was sort of dabbling in Bitcoin for fun. And yeah, we look here. 2017, sure enough, it said we're going to be end of 2017, we're going to be around about that 10,700 mark. And you know what? It wasn't exact, but it's pretty close. And again, you can see here, it's not exact, but it gets pretty close, like this particular graph. Now, 2018, it's projecting a price of somewhere between, well, not between, but of around 21,000. 2019, 41,000. 2020, 74,000. 2021, 127,000. So expecting in about 3 years' time for Bitcoin to finally hit that, that six-figure mark. Now, I think Bitcoin potentially could do it sooner, but obviously correct back down again, as we see Bitcoin does, because Bitcoin can correct 30 to 50 to even 70% if it wants to. So, but these are some of, the numbers. If we're again just following basic math and the price velocity of Bitcoin, now that Bitcoin has sort of is a lot more mainstream, potentially institutional money coming in this year when there's more regulations and whatnot, that's when we might see, these type of price movements. Okay, so what we're going to do is we're going to jump onto some live trading examples very shortly, but I just wanted to cover, these are, whenever you look at Bitcoin on social media or anything like that, you'll often find these are the most common, trading techniques that you use. And obviously a lot of this has been carried over from more traditional markets like stocks, FX, futures, commodities, and things like that. So again, like I mentioned to you before, if you get my daily analysis that I send out, you'll see a lot of Fibonacci analysis in there, support and resistance levels, and I just use one moving average, which is the 200 period moving average. So the 200 period moving average, again, just keep in mind that it's the average of the last 200 bars. So I often look at time frames on the 4-hourly, daily, and sometimes I might drill down to the 1-hourly just to sort of try and pinpoint exact movements. And of course, traditional indicators like Bollinger Bands, RSI, stochastics, and MACD. So today, what I want to do is just I'll show some of these resources as well. Oh, but just sorry, before I go on, with trading cryptocurrencies with easyMarkets, you get fixed spreads. So the spreads don't blow out. So if Bitcoin's going crazy, you're not going to see the spread all of a sudden double that you might see with other brokers. We also offer free guaranteed stop loss orders. So that's huge, because if you're trading an asset class as volatile as Bitcoin and other cryptocurrencies, you want to make sure that if you have a stop in the market, it's going to be guaranteed. You also have the ability to close trades over the weekend on Bitcoin, that is, and trade small sizes from as little as 0.25 of Bitcoin. So we've got other educational resources like our ebook, webinars, and seminars. So looking to run a in-office presentation, not too far away, hopefully in a couple of weeks' time. But yeah, so just if you have any questions, please let me know. So today's strategy is a simple one. Basically, each presentation I want to try and put together some strategies or add to a particular strategy, but this is one that I used to use on the FX markets. Basically, Bollinger Bands is a volatility based indicator, meaning that when periods of low volatility, you're going to see the Bollinger Band contract. When there's high volatility, it's going to expand, and it's based on standard deviation. So I'm using just a standard standard deviation, and what that means is if price ever finds itself outside of the Bollinger Band, that means it's a bit of an outlier, because it would only do that 5% of the time. So you know that the other 95% of the time, it should come back within the Bollinger Band. So that's the first trigger that I look for. So when price goes outside of the Bollinger Band, and then we look at the RSI. So the RSI is basically it's called the relative strength indicator, and it's a momentum oscillator. So basically it tells you when the market is overbought and when the market is oversold. So I've got here levels 75 and 25. I've been tweaking it a little bit, but I've actually gone back to just the standard levels of 70 and 30. So the reason why I did that 75 and 25. This is when Bitcoin was a lot more volatile, but we're starting to see it sort of settle in this current price range at the moment. So I will adjust that once it starts to really pick up and we start to see the daily movements increased, and I'll sort of adjust that back. But basically, for the buy rules, what we're looking for is for price to poke below the lower Bollinger Band. So once it does that, that's our first first rule ticked. So we go, okay, now we're watching you. We're going to watch for when the RSI, because the RSI generally is oversold in that region, but we don't buy until it moves out of that oversold region. So it needs to basically get oversold, come back, curl back up above it, and then we buy. Okay, and the profit target, generally we can target the upper band of the Bollinger, so the opposite end of the Bollinger Band, or we can look for support at the middle 20 period moving average. So so the sell rules is just the opposite. So let me just jump onto the chart, and it'll make more sense, and I'll sort of talk us through it. So I'll just wait for the chart to pop up. Okay, so here we have the Bollinger Band, and you can see, let me just bring this down a little bit more. Okay, so straight away, let's just focus on the latest signal that we would have got, which is here. Okay, so this area here, and what I'll do is let me change the color. I'll change it to, let's say, say this. Whoop, no, actually, don't like that. Do a lot of it. Okay, so that's a bit better. So essentially, this was the first trigger. So I'll just move that here. So as soon as this hit, okay, great. So we are looking for a trigger. Now let me just highlight this again. Okay, so the rule is it needs to go into overbought territory, which it is, but it needs to come back down out of that, and then we get in. Okay, so that doesn't happen till we see that. So you can see how the RSI went above, but then it crossed below at this level. So if I just get the crosshair and I move that across, that is where we go short. Okay, so as soon as we see that, we go short. So this here is our entry. Okay, so this candle is our entry. So we would have entered at this level. Okay, so what I like to also do is use generally like an ATR stop. Okay, so an ATR stop is basically your average true range. So let me just add that on, and I will. Okay, so let me just add that on. So if I had, so we can see right now the ATR, let's just say it's 75. So that's going to be my stop loss. So I'm going to put a stop loss of 75. So if I entered, let's just take this level here. If I entered there on the open here, so let's just say at this point here, let me actually just check what the ATR was at that point. Okay, it's actually 98. So we would have taken an ATR of about 90. Let's just say 100. It's close to 100 because it's almost 100 here. So we'll take that that level there. So if I entered in, let me just move this up. So if I entered in around there at 9:39, okay, we put 100. Okay, so it's very close. We would have, well, so we would have entered there, and you can see the stop loss there. So that's very, very close. So okay, so 36, 39, add 100 to that, very, very close. So we almost got stopped out on this particular trade if we got in there. Okay, but you can see if we had stayed in, this could have been the first profit target, so 900 and 9,216. So that's about 128 points. Or if we target this lower band down here, and you can see, that would have been a good trade, about 300 pips, or $300, I should say. Okay, so this here wasn't a signal because it didn't get outside of the band, and RSI didn't go into that oversold region. So we don't. So we'll scratch that. But let's go to another example. So this here we wouldn't have taken this trade because yes, it went outside, but this never went into that oversold region. Sorry, so we wouldn't have taken that. So let's keep scrolling. Okay, this is one that we would have taken. So here, this candle would have been our first trigger. We'll go, okay, you know what? It's sold down. We need to wait. Whooshka, this is where we enter. So at this point, we enter here. We enter there, which would be round about here. Our stop loss, and let's just check the ATR. So our stop loss would have been $116. Okay, so we're currently at 8835. So $116 is going to be around about there. So that's going to be around about the stop loss. So you know what? To be honest, if it was this far away, I probably would have just moved it below that low there. But anyways, so we'll leave it there, and we're in the trade now. So you can see first profit target on this line. So we could have got out there. That would have been around about 190 points if we kept going. So you can see it tagged it up here. So this trade was roughly about 400 for about 390 points. If we sort of went all the way up to that level. Okay, so again, that's another trade. So that was a long trade. So let's have a look at a few more examples. Okay, so here's one that we would have got stopped out at. So let me just move this across. So you can see it's fallen through out here. Okay, so that's our signal, and then we would have got an in around here. So I can visually see, this ATR 115, and we got in around there. So about 9,000. Yeah, we would have got stopped out. So this trade we would have got stopped out. If I go up again, so again, this is one that was triggered, but you can see how long it stayed oversold in. So you can sort of develop rules as well. This was oversold, came back in, oversold. But you know what? We got to take that one because it could have been the bottom, but it didn't, and then it stopped out there. But we would have got the next one down here. Okay, so here's another one. So here's a short signal. So we bounced above. We then get the trigger at this point here. So it's closed below here. So the trigger candle would have been this one here. So we would have gone short around here. Let's have a look at the ATR. The ATR at this point would have been 83. So it would have been, we put it $83 above. 78. So this is at 78. 83 above is going to be about 60, 9860 roundabouts. Okay, so you can see we're still in this trade. We didn't get stopped out. Very tight stop. We got in there, got in here, stop above there, moving sideways, moving sideways. Here, to be honest, you wouldn't probably take the profit there because it doesn't make sense because look how tight it is. So you probably try and run this a little bit longer because I'm going to zoom out to give us a bit of context. You can see this was pretty much at a high of a move, and this was off a pretty big ramp up. So we went up, 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 up. We got the signal. Doesn't make sense to do that because remember with Bollinger Bands it contracts and it expands, and you can see this point here it's contracting, right? So let me just show you. See how it contracts, then it expands. Bang, we've got the trigger to get in. Then it's going sideways, sideways, so it's starting to contract again. As we start to get volatility increase, I would actually hold this a little bit longer and let it ride down as far as it can, right? So RSI, if anything, probably look to get out here when the RSI and the moving average crossed above. Because remember, there's times when this signal will trigger in a trending market and it will also trigger in a sideways market. So in a sideways market, then perfect profit target would be just at the opposite bands. But when it's in a trending market, you can give this you can give this trade a bit more oomph, like let it run a bit more. Okay, so this trade here again, this is something I'll leave up to you to sort of work out where you would get out. But my intuition, just looking at charts for a long time, because I was looking at this. Oh, by the way, I'm doing this on a 15-minute chart. I was sort of looking at that as a bit of a high anyway, because we had a big run up. It got here, and if I just quickly show you, so this is that area there. Actually, wait, sorry. Let me just go back. So this area here, that was a 12. Yeah, so it's around here. So this was that downtrend line that I was looking at. So that's going to be a natural area where we'll find some resistance, and then eventually, we saw that fall off. So if it's at resistance, that and you're short, let it ride a little bit more, because you never know. It could be one of those once in a while trades where you just make a lot of money because it drops really quickly. But there are other times, and most of the times actually, we're just hitting singles, constantly. So let's keep going through. Let's have a look at a few more examples. Okay, so here you can see this is the Monday gap up. So we had, boom, big gap. Move that over here. We wouldn't have entered until around here, this candle. Okay, so so around about there. So we would have got in around here. Stop would have been quite high, 157. You can see the volatility is definitely increased here, right? So 157. So the stop's going to be way up here. So even then, so we might have even already been in a long trade, all three, because we wouldn't have been stopped out here already. And then we saw the drop, and we could have got out there. All right, so let's have a look at a few more examples. You can see here, we got our first trigger, but it was never oversold enough for us to go in, so we skipped that. Again, this one, even our RSI was up here. This didn't trigger. This triggered, but then it came back down. RSI didn't quite get there. Again, this one didn't trigger, but this one did. So this little candle here, which was pretty much the low on Friday, we would have got triggered. Okay, so actually, you know what? I'm going to do this more realistically, rather than sort of go this way. I'm actually going to move across this way, because that's going to be more realistic. Okay, so you can see here. So this is when you potentially may get caught out trying to catch a falling knife, but at the same time, the market is starting to turn, and you can see this signal here. I would have taken it because it's literally went up above and below, so I would have triggered, went above, below, bang. It's really faint, but that's the level there. So let's have a quick look here. Volatility 87, so 87 meaning we're at 10,049. So 10,049, that's going to be around about 11,000, and a bit. Sorry, no, sorry. It'll be about 10,130 ish. So we didn't get stopped out there. And you can see, the market came down here. Potentially, we might have got out around about here. Now, the key to note too is, as you start to break down these trades here, if you wanted to take these, because now you're counter trend trading, you just need to be a little bit more vigilant and really take the profit if it gets to this line or if it gets close to that. So I'll give you an example. So you can see it triggered here, started to trigger around about here, and we were oversold, so we got the signal right at that point. So let's add that in. If I put that in here, so we would have got in 9,169. The ATR 138. So we would have held, we would have been in, would have held, got as high as 930. So we already went 1-to-1 risk reward. That's probably an area where I probably would have taken profit, to be honest, only because this price action does not look bullish to me yet, because we've had such a quick dump, and if this fails to break above that, that's telling me there's a lot more selling pressure there. And again, you can see right at this level, this trade we would have got stopped out for sure. So this trade, if we took this one, okay, again, not the most ideal trade, but if we took it, we would have got in around there. Our take stop loss, so ATR 114, we're at 897. There's our stop loss. So we're in, didn't quite go anywhere. We got stopped out. So, and you know what? So we should have, because look at that. It just went, you do not want to be holding through there. Now, this signal I really like, because now because this tells me, see, you can see this bunch. Everyone's trying to buy the bottom here, but then you can see this big red candle, and then you see this candle. So that, as you probably know, in some of my um, analysis, I highlight areas where I name it liquidity pool. Liquidity pool basically means that's where a lot of retail traders will have their stop loss orders. So, for example, if I start to buy here, my stop's going to be just below there. What what the big whales are going to do in the market? They're going to run a gun for those. They're going to try and stop everyone out before they start to make a move up. So you can see that's exactly what happened there. So that's a very, very a common pattern that I see, not in just Bitcoin, but in a lot of markets, where you get that low, everyone thinks that's the low, they buy, then you see the new low go down. And obviously momentum indicators like like RSI, MACD, etc., they print a divergence. When you put them two together, you've got a bullish divergence, and that's exactly what we saw here. So low, lower low, you get a high, higher low, bullish divergence. That's a very powerful signal. So so here, this is one that triggered. Let me zoom in. This is one that I really like, actually. So right at this low here, I was watching this as well, and I was fairly confident that we were going to hold this level. So it came down, bang, and you've probably seen with my other analysis that I had the fib levels here as well. So usually, if I sort of combine this with Fibonacci analysis, I'll just quickly draw it on so we can see. Okay, so that was a low that I'm talking about there. But just quickly add. So I'm connecting it from this low, and putting that high in. No, it's not. Okay, there we go. So let me draw down the 15-minute chart. Okay, scrolling back. Okay, so you can see the fib's a bit lower, sort of a bit below. Okay, so that's probably not the best example of Fibonacci, but anyways, here we punch through. We saw it go down back above right at this candle. Okay, so down right above here. So we're entering in here. This is a very classical entry technique as well, where you see the hammer. So it is a candlestick hammer formation, and then you buy at the high of that hammer candle. Okay, you can see there was all this buy momentum thrust straight up. Sort of found a bit of resistance, came back down again. That wasn't a buy signal, but we're still in. At this point, stop loss is 127 points away. Didn't get anywhere near that, and then we had a nice rally up. So if we got in right about here, 8473, and we wrote it. Let's say we got out around here. That's not a bad trade. About 500 points. And you can see we did go short here. So let's have a look at a few more examples. But hopefully this is a strategy that you guys can see that can potentially be useful. You can see here's another one, right? Market takes big dump all the way down, bang, outside. We get in here, we get out there, all right? So it goes sideways, but then as soon as it goes outside, we close out. So we would have entered in around about here, around about this region here, 79736, and we would have got out around there, 992. So that's about 200 points. Not the best risk to reward ratio trade. Okay, so if I have a look again, here's another example where we could have got in, started to get the first signal. We move out. Okay, I like that. We're in at 10,577. ATR is about 76, so we'll be down around. So we got in there about 530, so just below that low. That's where our stop is. And if we target it, let's say that tag there, that's not a bad trade. About 200 points on that, or you might have taken a bit earlier. So again, this is a short-term trading strategy, right? It's not meant to make you, thousands and thousands of points in one trade, but it's about finding these signals and then trading and then knowing when to get out, when to get in. Hopefully, that was clear. And I just want to bring this up. This was my analysis just before. I was looking at Bitcoin and I looked, we saw, okay, I'll just quickly do this because my next presentation, I'll probably do it on Fibonacci analysis. But one of the things was I was able to sort of project this level here, when to get out. So I had some long trades earlier, and that was a level. All it is running the fib from this level here. Okay, so I'm grabbing it from this top, this high. I'll just get on the exact bar so it snaps there, down to this low. That gave me an advance. I'm running for the 61.8 because I can see this big thrust up. That's probably going to be a level that it's gonna run for. The next level is this one. Okay, so we basically have two, but this one here, so I'm basically running it from, I'm trying to get that exact level there. So this low to that high, this gave me a zone to take profits at. Okay, so using Fibonacci analysis, both from the retracement and extension point of view, this is a level where if I was long, I'll probably be looking to take profits there. And you can see, we've got a high, low. RSI would obviously gave us a bearish divergence at that point as well. Okay, so now let's see if we were able to find this particular level here. Okay, so how we do that is generally I'll run a Fibonacci retracement from top to low. See, it gets down to here, 78.6. So that would, if I was short up here, this is a level that I'll be targeting. So we got there. Now, I always need to sort of project out on a smaller time scale the fib extension of the previous wave. I'm trying to get it almost exact. Okay, so now, this little range here, see that little range there? I've projected it out. Look at where it hits. It hits almost exactly the 78.6. So for me, there's two things lining up there. That's my level. That's the level that I'm going to be gunning for to take profits. If I was short, I'll take profits there. Okay, so if I apply that same Fibonacci ratio, like running it from that first move. So, this has already happened. And if I go, oh, I need to find a profit target, look at where the 261.8 hit. So this is going to be my profit target, that I'm going to go for. So if I was short up here, I'll be taking it down here, right? So comes here, pushes through, that's fine, bang, come back up. And I can even also use that as a bit of a reverse indicator. Okay, you know what? I'm looking to go long a level as well. So we've done the fib there. Now I'm going to pull the fib up from here. And this, so that was a 78.6. This is my buy zone. So if it gets anywhere around here, that's where I'll look to buy. And you can see there was other prices here as well. So yeah, so that's how I sort of work out my levels with Fibonacci, and then I look to try and enter in on price action. So let me just jump back onto this slide. So this is still the analysis that I'm running today. We're still low, high, high, low, high, 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 low. As long as we don't break this and we start to break above his, this is a small, small to medium term, uptrend. Or let's say very, very on a short time frame basis, of course. Okay, so this here is basically a market heat map. So for those of you who have traded stocks before and you're familiar with the Iris platform, this is basically one that's been developed for the cryptocurrency. So that's the site there, coin360.io. This is the coin market cap website that I was talking about before. So currently the market cap for Bitcoin is 155 billion. So not that far off. The total market cap is 372. So ideally, we like to see this hopefully around the 500 billion mark towards the beginning of April. And if it can get there and we start to get some momentum, hopefully, it really starts to head up a lot higher. Okay, so what else can I show? So combined order book. So if you ever, get into cryptos and you look at buy and sell wars, here's a site, data.bitcoinity.org, and then you click on combined order book here. This shows you the combined order book. This is live too of all the major exchanges in the world. So you can see exactly where all the buy and the sell orders are and all that sort of stuff. So obviously you want to see, if we get to here, there's a huge buy wall. There's a lot of buyers sitting there, and yeah, so that's kind of how you can sort of look at that. But what I might do is just swing back here. Account opening offer for those of you who haven't signed up with us yet. So one of the things that we like to extend is a 20% initial deposit bonus up until the 23rd of March. So for those of you who want to learn more about trading, Bitcoin and cryptocurrencies, I'm always going to do it on Bitcoin because it's the most liquid one. But you know what? Try these strategies on other things that you like. I'm sure you'll find some, some way in which you can do that. The other thing too is if you're finding that the ATR stop is too tight, then times it by 150% or something. Just trying to adjust it to the volatility of whatever you're trading, because that's the thing with trading. The market's dynamic. You always need to make adjustments to get the indicators to give you the optimal settings for each market condition. So if the market conditions are a lot more volatile, then what I actually do is the RSI, I will tweak it so that it is only going to give me the 75 and 25 readings as opposed to the 70 and 30 that I'm getting at the moment, right? So yeah, so let me just have a quick look to see if there's any questions, and let me just pop this out. Okay, so yes, I will have a recording of the presentation, but other than that, I think I've done a good job in explaining the system because no one's got any questions. So I hope everyone enjoyed the presentation today. You can contact me. My email address is jimmyp@easymarkets.com, and yeah, I'll be looking at showcasing more strategies that we can use on a shorter term time frame, because right now, as the market's ranging, I'm going to focus more on volatility-based strategies. When we start getting into trending markets, then I'll look at more trend-following type strategies. Okay, everyone have a great night, and thank you for your time today. Yep, so someone's asked for my email address. What I'll do is I'll email you personally tomorrow. Okay, then take care. Goodbye, guys.